So what we woke up to today was some pretty bad news out of Nord Stream 1. Russia has said that they are going to shut down Nord Stream 1 another 50%, and it's only at 40% capacity. So now we're going to be at 20% capacity. This is why natural gas is going up so much in Europe, and this could spell economic disaster for the rest of Europe. And specifically right now, I know a lot of people aren't familiar with this, but Europe doesn't have its own natural gas. So obviously they get it from Russia. But what they do during this period of time when they don't need to use as much of it, they save it for the winter time. So this could be something that drags out for a while. And coming to winter time, really throughout the rest of this year, you could have a lot of fear in Europe, and they're even starting to talk about government bailouts for some of these LNG companies that won't be able to fulfill their contracts. Now, why is this important? Because whatever happens in Europe will have an effect in America. Even the price of gas and LNG going up so much overseas already is going to have an effect on company earnings. Take for an example, Apple has 25% of their sales coming from Europe. If you're spending so much money now on gas and other things, well, that's a big problem. And even the conversion rates for currencies, given what the euro has done, weaken so much against the US dollar, this could spell disaster for large tech earnings. Something like an Apple might not perform that great over the next couple of earnings, and probably this earnings could be a big shocker to market participants. Now, on top of that, you are still seeing the yield curve, which is inverted 20 basis points, and we do have earnings tomorrow in pre-market. We also have earnings in after hours tomorrow, which will include Microsoft and Google, and those will be the two most important earnings for tomorrow, and that could be a pretty bad thing for the markets overall. Now, on top of that, you're seeing ECB Lagarde says they will raise interest rates for as long as it takes. This is like Fed Jerome Powell of Europe, and the problem with this is that Europe and the ECB, they usually don't start raising rates until it's far too late, and then they tend to go far too aggressive. That's what happened during 2008. That's what happened during 2011. They literally have the worst timing in the world, and they do tend to crash the European economy a lot faster than the Fed does for America, and that will also feed into what the American stock market does. So we have a lot to talk about in a very short amount of time. Hit that like button and subscribe to the channel. Comment down below, what is your thoughts on all of this? What do you guys think about earnings? Which ones are you worried about? Which ones are you excited about? Do you think we're going to crash? Do you think we're going to rally? Let me know your thoughts on all of that down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description to do so for that one. We do have some earnings trades, some Apple trades. That's going to be pretty exciting because I think this is going to be a real shit show all the way around. So let's get straight into it. And first things first, AMC stock, because that's what we really like to cover here on this channel. We like to cover the broad stuff, the broad, macro, what's going on. But AMC down about 3.90% today. And what you're seeing in the options market paints a totally different picture. You were seeing 100% positive order value for the day. 5 orders totaling $214.77 thousand. A January 19th, 2024 $18 call for $114,000. August 19th, $20 call for $12,000. August 5th, $20 call for another $12,000. August 19th, $16 call for $41,000. December 16th, $24 call for $35,000. So those are all of the interesting orders that we have seen today in the options market from hedge funds, and all of them are bullish, and a lot of them are quite far out the money. $20, $24 for these strikes. it's far out the money if you're a hedge fund that has millions, if not billions of dollars. You like to, play things a little bit differently. This would imply to me at least people are still looking forward to a decent sized move up in AMC stock over the next couple of weeks, next couple of months. Now, the short interest, you're currently sitting at an estimated 18.43% dollar value of shares that is currently sold short of $1.47 billion. Free flow out on loan 26.64%. Shares out on loan 137.33%. Days to cover 3.27. Cost to borrow 9.97%. 100% share utilization. Cost to borrow max of 10%. Cost to borrow average of 9.92%. Cost to borrow minimum of 8.93%. So a lot of the same old here. You are seeing the cost to borrow. It looks like it's going down a little bit today, but I think that's because there's a lack of actual activity of, hedge funds taking out shares today to sell short. So there is that information. Yield curve, like I said, still inverted 20 basis points. It's been inverted for quite a while, and this is something the Fed will acknowledge and will be important to the markets, how they really answer that. But take a look at this. I think this is the funniest thing that has happened today. The White House is arguing against the technical definition of a recession. It says, what is a recession? While some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists value the state of the business cycle. Instead, both official determinations of recessions and economists' assessments of economic activity are based on a holistic look at the data, including the labor market, consumer and business spending, industrial production, and incomes. Based on these data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. Now, this is a sack of shit. Let's be honest here. Why is the government trying to make it so we don't go into a technical recession? Well, it's because the midterms. It's because elections, crooked politicians doing their work at their finest, baby. This is a technical recession. You are currently in a recession. This is what a recession feels like, okay? So how are the markets going to react to that? Well, the markets are not going to care, let's be honest, what the White House says. This is more for the people, so the people don't freak out. The markets are going to care about a technical recession. We will get that data coming on Thursday. We are expecting to get, let's go ahead and refresh this again, a negative 1.6% GDP print for Thursday. Now, this could be a good thing for equities because if you go into a technical recession, price of oil falls, inflation should come down. You might actually experience deflation. That's what you usually get during a recession. And the cost of capital, interest rates become cheaper as investors start to buy up the yield curve. They start to buy up the 10, 5, 20-year bonds, and that pushes down lending cost. But the real bad scenario here is if the Fed doesn't indicate that they are slowing down. If the Fed just says the same thing that they've been saying, that they're going to keep raising rates, that they're going to evaluate, what the data looks like and go from there. Kind of what we've been getting. Mix that with a technical recession, mix that with bad earnings. Well, that is your hell week. That is your shit show in a nutshell. So definitely be watching for that one. Earnings Whisper has Tuesday earnings. Pre-market UPS, Coca-Cola, GM, GE, McDonald's, Raytheon, ADM, Albertsons Companies, Senti Corporation, and Kimberly-Clark. These are going to be important names. Obviously, the first 5 or 6 here are going to be the most important for different segments of the stock market, for different businesses. Tuesday and after hours, that's where things really start to kick off this earnings season. You have Alphabet, better known as Google, Microsoft, Visa, Enphase, Chipotle, Texas Instruments, Skechers, Ameriprise Financial, Boyd, and Mator. Obviously, Alphabet, Microsoft, those are going to be important. I'm not as worried about Microsoft, kind of worried about Alphabet. We've talked about that, the ad rates and what's going on right now. Not really a good thing for advertisers, right? So there you guys have that. As far as economic data, we did get the Dallas Fed manufacturing numbers today, and it was actually not a bad thing. I believe that or not. So the markets actually took that as a little bit of a positive, but what you're seeing today actually weighing down the markets is stocks like Apple, stocks like Microsoft. Apple's down 1%, Microsoft down almost 1%, S&P starting to get a little bit more red candles as of right now, down about 0.14%. But what is actually holding up the markets today is a lot of energy. So what we're actually seeing in the energy market is that oil is up 1.64%, Brent is up 1.58%, natural gas up 4%, RBOB gas up 3.47%. So oil is kind of helping to hold the markets up as of today. Asia was down a little bit marginally. Europe is fighting between negative and positive. So that is that. As far as economic data for tomorrow, for Tuesday, you have S&P Case-Shiller home price month over month for May. And you do have new home sales that come out. You also have Richmond Fed manufacturing at 10 a.m. All of this. More Dallas Fed. That's pretty much it. For Wednesday, obviously, you have durable goods orders and you have the Fed. That's going to be the most important thing of this week. Could mark a bottom for the stock market or could, prove to us that we have more downside to come. And then on Thursday, obviously, GDP. You do have core PCE, real consumer spending quarter over quarter. A couple of data points like that, but nothing too crazy. Earnings are really going to dominate the headlines here for this week. And on Friday, you have personal spending month over month and personal income month over month. PCE price index as well, Michigan consumer sentiment surveys. All of that will be important, but I think it'll really be a back burner event compared to what we have in store for all of this week. We are expecting to get a 75 basis point rate hike on Wednesday with about a 76.9% probability of that one. And that is going to put us at that neutral rate, 2.25 to 2.5%. That is considered that neutral rate. And we'll see what the Fed indicates for how high or how restrictive they want to go past that neutral rate. So there is really the information you need to know specifically for the day. Watch that Europe Nord Stream situation. If that goes completely offline, that's going to be a really bad problem. And people were talking about a 20% decline in Europe's stock market, and that would affect the U.S. in a very dramatic way as well. So let's go ahead and pull up AMC, and while I did pull up the chart, the dollar is still sky high, fighting between going negative today and going positive. And the best way to look at this, the higher it goes, the worse the situation actually is, the more fear there is, and the harder the conversion rate is going to be for companies that do business overseas that have to turn those US dollars in those foreign currencies into US dollars. Unfortunately, AMC is a part of that group that would be affected by that conversion rate. Now, if we look at AMC on the daily candlestick chart, you guys can see that actually, let's go ahead and pull up the moving averages. And we are now under the 100-day moving average. We're under $15 per share. We're sitting at $14.82 per share. So the next level we need to find support at is the 50-day moving average. And that, my friends, is currently sitting at $13.38 per share. So it looks like we could be setting up for a pretty negative week overall. And obviously AMC is not immune to negative weeks, and we could fall back down to $13 per share. I would expect to find support there. If not, I mean, $12.50 looks like the next level of support, but it's very possible at the same time, given Microsoft earnings tomorrow, could help the markets be a little bit more bullish rather than not. You could hold up this $15 level of support and then break out again above the 100-day moving average. Like a lot of people have talked about, AMC is primed for a rally. We just talked about that in the last video. That's literally on the thumbnail of the last video of 17-year expert analysis talking about a rally for AMC stock. Now, I wouldn't totally discredit the $15 price. We got to see what happens by the end of the day today. It's possible we can make a move up 18 cents from here and close above that. But right now, it's not looking so good. Now, as far as volume, On Friday, we were at 31.5 million. Today, we're sitting at 10 million, and we are about 2 hours into the trading day, approaching 2 hours into the trading day. The RSI is at 50.75, so pretty neutral right there, and the MACD is starting to go bearish. We have not gotten that crossover yet, but it looks like we are about to. So that is going to be all for this video. That's what you guys need to know. That is what is happening for the day. Hit the like button, subscribe to the channel, do what you guys got to do. If you guys want to come trade with me live in real time, link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.